So what we see across all the different investment classes is whether it's the NASDAQ 100, the S&P 500, the Russell 2000, Bitcoin, or even Ethereum, all of these different investments compared to the underlying investments that it's tracking were actually What's up, you guys? Welcome back to the Average Joe Investor channel. It's nearly the end of 2024 and we're in the process of looking at all of the different types of high yield investments there are to choose from, and there are a lot of them. Today we're focusing on the 5 Roundhill income ETFs that are available, and as we move through other investments, whether it's ProShares, NEOS, GlobalX, etc., we're going to be incorporating them all into one massive, huge, high yield ETF tracking spreadsheet that we're going to cover once we're done with all these different ETFs, and we're going to continue to track it all along the way into 2025. I never want to waste your time, and I always want to deliver massive value. So without any further delay, let's dive into the spreadsheet. While Roundhill has a number of different ETFs, only a few of them are focused on creating income. So we've got here QDTE right here, the Innovation 100 0DTE Covered Call Strategy ETF. We also have XDTE right here, the S&P 500 0DTE Covered Call Strategy ETF. Then we have RDTE, the Small Cap 0DTE Covered Call Strategy ETF. Scrolling down further, we also have the Bitcoin Covered Call Strategy ETF. And then lastly down here, YETH, the Ether Covered Call Strategy ETF. Now, one quick note here, QDTE, RDTE, and XDTE all are a 0DTE covered call strategy because these investments have underlying ETFs that you can actually sell covered calls on a daily basis. The other two investments, Bitcoin and Ethereum ETFs, income ETFs, those do not offer daily options, therefore they're not titled 0DTE. They're based on at least a weekly, if not monthly, covered call frequency. Now, really quick for an overview of the top 3, which are 0DTE, which is QDTE, XDTE, and RDTE. These investments are utilizing 0 days to expiration options in an innovation index, or the S&P 500 or that Russell 2000. They seek to provide overnight exposure. That's a key word here, overnight exposure to the Innovation 100 index and generate income each morning by selling out of the money 0DTE calls. What this means is overnight exposure, right, to the index means that they own the index, okay? You can't say that you have overnight exposure to the index if you're just selling options, okay? So they hold the index in some way, shape, or form. And then secondly, they generate income each morning by selling out of the money 0DTE calls. So they wait until the morning, they sell options that expire that same day, and they sell them out of the money, meaning that they are collecting income, but they're also collecting some level of capital appreciation because those options are out of the money. Here's a quick look at the prospectus for QDTE, though I suspect it's very similar for XDTE and RDTE. The fund's sold call options will generally have 0 days to expiration, known as 0DTE, when sold by the fund at market open or shortly thereafter. On every business day, the fund generally sells out of the money 0DTE call options on the Innovation 100 index that will expire at the end of that same day. Here's another key here. The fund's purchased call options, this is key, purchased call options will be struck deep in the money and have a longer maturity when purchased, thereby offering synthetic long exposure to the Innovation 100 index. Okay, so we're not owning shares of an ETF or a stock here. We are we're creating synthetic exposure to the underlying index by purchasing call options that are deep in the money, and the deeper in the money that they go, the more they track dollar for dollar with the movement of the underlying index. And by utilizing a longer maturity, it also decreases the daily impact of theta, or time decay, eroding the value of the underlying call option that you purchased. What's also interesting about this type of strategy compared to what we see with YieldMax is we have a purchased call option, just one option to create a synthetic long exposure to the underlying stock or ETF, whereas YieldMax, instead of using a purchased call option deep in the money to create long exposure, they instead use 2 options, a purchased call option at the money and a sold put option at the money, so they've got the same exposure both ways. Now, the benefit of doing it the Roundhill way is you are capping your negative exposure, right? If the stock goes down significantly, the worst thing that could happen is the entire value of the call option that you purchased goes away. With YieldMax, though, you have significant, never-ending, at least down to 0, downside exposure because you sold a put option. Okay, so now that we have an understanding of what these ETFs are, let's take a look at the actual results. Now, one thing you're gonna notice here is that these are all launched on different dates here, except for QDTE and XDTE, which were both launched on March the 7th, 2024. Bitcoin was launched on January 18th, 2024. And then we also had on 9/4 the Ether covered call strategy ETF. And then with the Russell 2000, we had 9/10/2024. So what we've got here is two different views. We're gonna have the 6-month view, which we can only do for 3 of them. Now, by the way, one of the things I've gotten as feedback in the comments is, hey, why don't we look at, well, reinvesting dividends, doesn't that matter? It does, but generally in the past what I've looked at is, hey, you know, most of the time these high yield covered call ETFs or high yield put option ETFs, whatever they are, creating income, most of the people that are gonna own these are ones that are about ready to retire or are actively living on the funds. So reinvesting distributions is not necessarily the right view to look at for these types of investors. But I've got enough feedback to say that I guess I should look at that at least because people are doing it so we can see what the results are and how that compares to just owning the underlying index. So we're gonna make sure and have that view in this video. As I mentioned, here's the reinvesting distributions section right here. We're gonna look at income and portfolio balance there. Whereas if we're living on the distributions, we're gonna look at income, portfolio balance, and total return as well. You'll see here that RDTE and YETH both are marked as not available for the 6-month review. We've got a second view right here, since origination. So this is not an apples to apples comparison here except for QDTE and XDTE. Everyone else has a different investment timeline, but we are going to use this data just to understand it, to look at it, but also to compare it to its underlying index. How did QDTE do compared to QQQ, the NASDAQ 100? How did XDTE do compared to the S&P 500? How did RDTE do compared to the Russell 2000? How did Bitcoin or YBTC compare against the Bitcoin ETF, IBIT? How did the YETH ETF do compared to the Ether or Ethereum spot ETF? So that data is not necessarily unuseful, it's just going to be used to compare in a different way. Let's start off here and look at the 6-month review for QDTE, XDTE, and YBTC. This is June through December 2024, by the way, and we're talking about an initial lump sum investment of $100,000 at the beginning of the period and no contributions along the way, and we're either living on the distributions, so we'll look at income and capital value, or we'll look at if we were owning the investment and reinvesting all distributions into more shares of that same ETF. Let's go ahead and dive in here. First off, we've got living on the dividends, total income here. QDTE was at $29.88 compared to $17,000 for Bitcoin and then $14,000 for XDTE. So clear winner here was QDTE. And then we've got portfolio balance here. The winner was XDTE, which is pretty common. Usually when it comes to income, the NASDAQ 100 wins. And when it comes to portfolio balance on these ETFs, then the S&P 500 wins. And that's the case here, though Bitcoin was very close second place to the S&P 500 in this time frame. And then total return here, top result here was YBTC at 115,760, followed by 114 for QDTE and 113 for XDTE. Now, if we're looking at reinvesting dividends along the way, that total income during that time frame, again, you're not living on it, you're just throwing it all back into more shares, would be $23,296 for QDTE, followed by YBTC at 19, and then XDTE at 15. From a total portfolio balance perspective, that portfolio balance would be 120 for YBTC, 115 for QQQ, and then XDTE would be at $114,000. Now, of course, during this time frame, we saw Bitcoin rally and also blow through previous records in excess now of over $100,000, at least temporarily. So that certainly factored this in here. But for this time frame, the Bitcoin covered call ETF performed very well. All right, now we're going to look at since origination. Okay, so this is going to allow us to look at all 5 of the ETFs. Now, again, you can't compare these numbers here to each other because they have different time frames. So something like Bitcoin having more income than QDTE, well, the inception dates are different. So you can't compare these to each other except for QDTE and XDTE, which you can compare. You got 26,000 and 18,000, which they have the same inception date. For portfolio balance, XDT was higher at 98 versus 90. And then total return, XDT was higher than QDTE by about $100, maybe a little bit less. Now, if we were reinvesting distributions along the way, we're at 30,000 for QDTE versus 20,000 for XDTE. And then for portfolio balance, we have a higher number here with QDTE at 119 compared to 118, 458 for XDTE. Now, really though, this data points here doesn't tell us much by itself. We have to look at it within the context of comparing it to the underlying stocks or ETFs it's compared to. And this was accomplished here. If you look at the actual data here, which I've got all along the bottom here, all these different tabs represent the different data sets. So for QDTE, if we scroll over here, I actually captured as well the NASDAQ 100 data. For XDTE, if we scroll over here, I captured the S&P 500 or SPY. For RDTE, I captured the Russell 2000 IWM. For YBTC, scrolling up here, we captured IBIT. And then for YETH, scrolling up here, we captured ETH, the Ethereum ETF. So within all of that data here, let's get some context. Let's look at these different graphs right here. So this first one here is QDTE versus the NASDAQ 100. And this is with and without reinvesting distributions. So we've got in light pink, QDTE, and then in light orange right here, we have the NASDAQ 100. So clearly, the NASDAQ 100 outperformed based on capital value, but that's not the entire story because we have not accounted for reinvesting distributions. So, but when we do that here, we've got dark pink represents QDTE with reinvested distributions, and then dark orange shows us QQQ with reinvested distributions. And if we look really closely here, QDTE actually overperformed since March of 2024, just slightly compared to the NASDAQ 100. Here we have XDTE versus the S&P 500. Same idea here. Light blue is going to be XDTE. Light orange is going to be S&P 500. Clear difference in capital value, which is what we'd expect when we're not factoring in distributions. However, if we are reinvesting all distributions, we've got dark blue, which is actually outperforming the S&P 500. Scrolling down here even further, we've got the Russell 2000 versus RDTE. Same idea here. RDTE is in light blue, and then we have reinvested distributions in dark blue. And then the same thing for the Russell 2000 IWM, light orange and dark orange. And we can see here also the Russell 2000 is underperforming RDTE when factoring in reinvested distributions. Let's look at Bitcoin here. Bitcoin's a little bit of a different situation. Light blue is the YBTC ETF. Dark blue is reinvested distributions, and then way up here is Bitcoin. Now this makes sense, right? Because Bitcoin has drastically outperformed many investments, and it would just make sense that a covered call ETF would be capped out at times on that growth. And you can actually see that in the data. Right here, instead of popping up, it was leveled off. Here, kind of leveled off compared to up here. Right here, a little bit of leveling off, and then same thing right here. Instead of this catastrophic jump here, we have a leveling off of the growth. And then Ethereum right here, same kind of idea. We've got at times during this time frame, YETH was outperforming, but once there was a large pop-up here in Ethereum ETF that was not matched by the other two, that resulted in significant here outperformance by the Ethereum ETF compared to the YETH income ETF. Here's a look at two more graphs here related to the other data. This is the 6-month review of QDTE compared to XDTE compared to YBTC for the period June 2024 through December 2024. This is portfolio balance with just the capital value, and then also with reinvested distributions to make sure that we have an apples to apples comparison here. So light green is Bitcoin. Then we've got light blue, which is QDTE, and then light pink, which is XDTE. And we'll see here that the top performer was just slightly XDTE during this time frame compared to Bitcoin, with QDTE being far lower. But with reinvested distributions, Bitcoin outperforms, followed by the NASDAQ 100, followed by XDTE. And then here's a look at income. This is cumulative distributions during the same time frame. We've got QDTE in light blue and dark blue, XDTE in light pink and dark pink, and then Bitcoin in light green and dark green, the YBTC ETF. And what we see is that the distribution frequency is clearly more frequent with QDTE and XDTE compared to Bitcoin, which I believe appears to be monthly. However, from a total distribution standpoint, we've got outperformance by QDTE, followed by Bitcoin, followed by XDTE. So this is the review of the Roundhill Income ETFs review, and it's just by itself, but just know, let me just pull this up here, we're building out a much bigger ultimate high yield ETF review. We're gonna have all the data in here. We're gonna even include all the ETFs that don't qualify and just mark them as not yet available, because the goal is to actually continue to build this out and track it and keep it updated so that it can provide a ton of value for you guys. This part of the data is not done yet, but just know that it's in process, and I'm gonna include all the ETFs we already talked about in the covered call ETF section. We're also gonna include these new ETFs as we cover them. So the NEOS funds will be included here, Invesco, Amplify, JP Morgan, all of that's going to be included here, and we'll eventually, over time be able, and all the yield max too, by the way, eventually we'll be able to say, of all the high yield income ETFs out there, these are the ones that have performed the best for the past 6 months, past year, and past 2 years. If you want access to this spreadsheet from Roundhill or any of the other spreadsheets I talk about on the channel, and if you want access to that upcoming massive high yield dividend ETF spreadsheet, then you want to make sure and join the Average Joe Investor Patreon community. Tons of value there from the spreadsheets, of course, and also from the DIY Average Joe Investor community as well in Discord. Tons of value. Make sure to check it out. Link down in the description below. Hopefully this video added some value to you. Make sure to leave your 2 cents down in the comments below. It's my goal to respond to as many of these comments as possible on the day I post a new video. That's all I got for you guys. Have a great rest of your day, and thanks for watching.